earnings season is here, and it's officially being kicked off by the big banks, of course. So I brought our usual contingent of big banks so we could check in and see what their earnings reports are looking like, what their track record is, and just how far the stocks have fallen back, because it's been pretty brutal since I last brought you these charts. So let's jump in and see if anybody is on sale and who's looking the best here going into this earnings season. First stock off the gate is Citigroup. Now, this was one of the better performers of the past 2 years until the sell-off there late 2018. So now, out of these 5 that I'm going to do today, this one has actually pulled back the most over the last 3 months. It's down 23% in that time period. But as you can see, its last miss was all the way back in 2015. So it's not the earnings beat or miss that's the problem here. It's just fears about the economy, about the Fed not raising rates, about tightening money supply, various things that could impact the banks, even though we know the Treasury Secretary called them all and they said things look fine. But is this a buying opportunity? We're about to find out, because Citigroup will lead off all of the big banks this season with the first report out the gate, so you don't want to miss that. Then we're going to switch over to one of the ones that has been one of the troublemakers of the big banks, I would say, and that is Wells Fargo. So we have Wells, you can see it's all over the place, and it has missed the last 2 quarters. So that's a little more unusual for the banks, as they tend to have a little bit better track records, but we had those 2 misses in a row, and then the shares have sold off along with everybody else. So these are down about 10% in the last 3 months. So not as bad as Citigroup, but it was already a little bit weaker here going into that sell-off. But Wells is always one to watch. Again, some of these you might be able to get a deal on. Then we're going to switch over to the bank that I always cover that most of you probably don't know as well, First Republic. This one is one of the growth banks. It's headquartered in San Francisco. It basically covers a lot of the wealth management out there in Silicon Valley in the Bay Area, and there's huge wealth creation, so you can imagine what has been going on there. But finally, we saw a little bit of pullback here after these shares have basically traded in this narrow trading range for 2 years after the big run-up. And the beat and miss has not been good. As you can see, it's only beat those 2 times out of the last 6 quarters. So it's gotten a little bit not reliable on the beat side of things. So we'll see what happens with First Republic here. And then we're going to get JPMorgan. This has beat 12 quarters in a row. Again, that's not really the issue with JPMorgan. It is one of the more consistent of the banks. But you can see it too has pulled back a bit, not as much as some of the others. It's down 12% in the last 3 months. So that's not too awful, not in a bear market yet. But everybody will be tuning in to Jamie Dimon. He's kind of the soother of the big banks now, and we'll see what he has to say about the economy, the business out there right now, and what he sees happening in 2019. And then we're going to switch over to Bank of America, the other of the big 4, so to speak. And it too has a real good track record. 10 beats in a row. This bank is often overlooked. It too is sold off. It's down 15% in the last 3 months. So a nice little pullback here. Are these shares cheap enough for you to get in now? And will we see the bounce? It's the same story for all of these banks, as they're pretty much moving in tandem here. So the financials have been one of the weakest of the sectors, other than energy, out there on the S&P 500. Will we see rebounds, some bottom feeders coming in there? We did in 2016, when this pattern was also in place, when they got really beat up going into this earnings season. That's when Jamie Dimon did his big $26 million share purchase of JPMorgan. So will we see some of the insiders jumping in after they report here? It should be interesting, but I'm glad the banks are leading off, because they're going to give us some real valuable insight into this earnings season. So as always, I'm going to be bringing you all of these charts all earnings season long. Don't miss a single one. I'll be here every week with all the great names, including the FANGs and all of the tech companies and all the other names you're interested in all earnings season. So subscribe again on Zacks.com. And also on YouTube, so you don't miss a single one.